Hobby businesses. Hobby businesses are a fun and touchy subject. A lot of people get scared right off the bat. Well, no, I need to show income, or no, I can't take that deduction. The IRS will audit me, and they'll come back and take a bunch of taxes of mine and garnish my wages, and that's just not the case. So a couple of things I want you to think about when we establish a hobby business. The IRS allows a deduction as long as it's ordinary and necessary within that taxable year as you carry on a trade or business. What's interesting is this was changed a few years ago. It used to say anything that's ordinary and necessary in pursuit of income or in pursuit of profit. Right now, it's just in carrying on a trade or business. And then it lists all the deductions and things like that you can take throughout the year. So when thinking about, hey, I like to golf, I like to camp, I like to fish, I like to ski or snowboard, I like to just travel and go try different places, I like to try different foods, whatever it may be. I like to go ride my bike, I like to run, I like to hike. Whatever it is that you're into, we can turn that into a tax deduction. The money that you're spending, we can turn that into a tax deduction because we will show that, hey, this is an ordinary and necessary expense. We are establishing a business. We're showing that we're trying to gain customers. We're trying to market. We're tracking the deductions, the potential income, all of these things are tracked. So we're showing a legitimate structure of a business, which allows us to then take those ordinary and necessary expenses as a tax deduction, which offsets your income, your W-2 income as well. And there's some examples down here of different deductions and things like that you can take, and also deductions you can't take, or transactions or money that you're spending that you can't take. But this is the full section. And again, it's section 162, and right off the bat, 162A breaks everything down that you can take in the form of a deduction, a tax deduction. Again, you make $250,000 on your W-2 income and you spend $50,000 in your different hobbies and things like that, that means you're only going to be taxed on 200 instead of that full 250. Right? So you either get a big refund back or we could go tax exempt throughout the year. But this is the section that specifically applies to hobby businesses that will turn into an actual legitimate business with you. Okay, so here is the example that I'll break down with you here. So this is turning your passion, your hobbies, whatever you're into a legitimate business. The focus is going to be to structure it, document it, and then deduct it. And again, this is according to section 162A. And this breaks down a few other internal revenue sections that we need to test, that we need to pass. Okay, so what is a hobby business? It's a hobby. It can be a business if you operate it with the intent to make a profit and meet the 9 factors in Treasury Regulation Section 1.183-2. So, like I mentioned previously, Section 162A had that reference there before. They moved it to show a full profit motive test in this section here. So this is what I want to walk you through. So how are we going to structure this with you? Okay, we're going to structure it by choosing what hobby you want to dive into. It's going to be something you're passionate about and that has a market demand for it. And we break down some examples here: photography, fishing, fitness coaching, going to the gym, woodworking, whatever it may be. We're going to create a business entity. This is an LLC for liability protection, for credibility. We need to go get an employer identification number with the IRS. We'll open up a business bank account with you. We'll keep it separate. Okay, everything is done structurally. We develop a business plan. We write out, it just has to be a simple plan, even just a couple paragraphs that shows how you'll make money, how you want to make money. And it can be breaking down services and products, target market, pricing strategy, marketing plan, structuring it to where it actually has a plan behind it. And then we have to act like a real business, right? You have to market your business via social media. It's nothing crazy, nothing hard. You'll keep regular hours, a couple hours a day, right? It can be a side hustle, right? It doesn't have to be a full blown business where you quit your job and you jump all in here. We'll build a website. You can build a website. You can track the income and expenses, invoice customers or family members, and continuously work to improve the profitability. Records, that's huge. You have to keep solid records, whether it's a software like QuickBooks, whether it's a software like Zero, whether it's just Google spreadsheets, whatever it may be, we want to keep records. Showing a profit motive. So there can be several profit motives, which we'll dive into down here. Report the business. Okay, so reporting income and expenses on a Schedule C on your tax return. The 1040 is your personal tax return. The Schedule C is a document that shows what your income and what your deductions are on that. This is what offsets your W-2 income, are the deductions, are the transactions. And then be consistent and patient, right? Profits may not come right away. That's why it's okay to establish a hobby business. Okay, so now diving into the 9 profit motive factors. So I'm just going to go through these with you here. So, manner in which you carry on the activity, expertise of the taxpayer or advisors in that industry, time and effort spent by the taxpayer, expectation that assets will appreciate, success of the taxpayer in similar or dissimilar activities, history of income or losses, amount of occasional profits, financial status of the taxpayer, elements of personal pleasure or recreation. Okay, so as long as we hit those 9 targets there, then we'll pass the profit motive factor. Okay, it's and here's a little highlight here. No one factor is determinative. It's the total picture that matters, right? So as long as we're hitting all of these, it's okay. Okay, so here's the example that breaks down how this is going to be applicable against your taxes. So in the example, it's a photography business, and we're going to be offsetting the W-2 income. So John is a W-2 employee earning $120,000 a year. He also runs a photography business as an LLC. We've structured it properly. Everything's been dialed in. We've tracked all of the expenses throughout the year. He actually didn't make any money, right? Nobody paid him to do anything, but we had to spend all of this money to operate this business. Total expenses for the year were $15,500. The net profit, there was no net profit because there was no income, right? If he made $30,000 up here, then his net profit would be $14,500. So this $15,500 of expenses is tax deductible against the W-2 income. So you have 120,000 minus 15,500, that's $104,500. Now, the tax savings depends on the tax bracket, right? If there was other income, other places, if the spouse had income, those type of things. But generally, you're going to either receive a refund for the 15,500 that you paid in taxes on your W-2 income, right? Or we'll go exempt throughout the year, like I've said in other videos. So there's a real life example right there of what that could look like. And this, again, this could be a fishing business. This could be fitness coaching. This could be woodworking. This could be camping. This could be so many different things. And this is how we would structure it. So again, just so you know, common deductible business expenses, equipment, tools, supplies and materials, marketing, advertising, website, software, education, training, travel, right? Travel. We can show that you're traveling for business as long as it's documented and structured. Insurance, professional services, bank fees, merchant. So if it's ordinary, necessary, and directly related to your business, it's going to be deductible. So I hope this helps. I hope this gives you an idea of how you can utilize your current hobbies and create tax deductions from it.